I would just to kind of add to your little comments there and stuff. So I should declare who I am as a trader in terms of on an intraday basis. I am very much a mean reversion and reversal trader because I think 80% of the time intraday markets, especially FX markets, are range bound. You get one good trend day a week maybe, but the rest of the time it's primarily mostly kind of range bound, which suits mean reversion and reversal. So, as an intraday trader, Paul is very much a mean reversion reversal trader. But swing trader, Paul, position trader, Paul, is very much about where possible. My strategy is desperately simple. Okay, I am within FX indices and commodities markets. I'm looking to buy strength, sell weakness, and ideally enter on a pullback using a price action as a trigger. There you go. That's it. Bang. Very, very simple. All right. So it's a case of, if a good trend leaps off the chart, I mean, you can use whatever indicators you want if you feel the need for it. But reality is a good trend, leaps off the chart. The challenge we have is that markets tend to only trend 20 to 30% of the time. But when a good trend leaps off the chart, well, then you don't want to fight it, right? Don't fight it. You basically want to find a way to surf it. And in good trends, pretty much anything works. You want to trade a breakout, that's fine. You want to trade a pullback, if you get a pullback, that's fine. You want to trade bounces of moving average, you want to trade breakouts of Kelton charts, etc., etc., etc. In a good trend, pretty much everything works. Everybody's a superstar, everybody's a rock star in a good trend. But as I said, markets only tend to trend 20 to 30% of the time. I know I work on a premise for my own trading is that, as a sort of swing trade in FX markets, is that I will get, on January 1st of every year, I will get 3 to 6 good, what I would call super trends. I'll get 3 to 6 of them a year. The thing is, I don't know when they'll come and I don't know where they'll come. I might have an idea. I might have a sense, but, anybody who's telling you they know exactly where the trends are coming for the year ahead is probably talking out of their hoop. But that is why every, 2 hours every Saturday, I'm doing my weekly analysis without fail, because basically the whole idea is to give me an understanding of where's the strength, where's the weakness, and is that then followed through with a trend and followed through with the momentum. So a very, very good example of that at the moment, all right, over the last 6 weeks has been a case of trading, basically shorting the yen. So for the first half of this year, you could basically short the dollar and buy pretty much anything else, in particular things like Swiss franc and sterling. But if we look now over the last, people can look at this, on their own charts over about the last 6 weeks or so, it has been about shorting yen, in particular, basically buying Swiss yen, buying euro yen, and this month a little bit of CAD yen, because basically Swiss franc and euro, they are strong by my Stan model. Japanese yen is bottom of the pile, so I want to be buying strength, I want to be selling weakness, and when it's in a good super trend like that, well, then I have the conditions to basically attack the trend.